How's it going, guys? Today we're going to talk about margin. So this is going to be a margin class in Forex trading, which is probably one of the most important things, if not the most important thing. Well, it's not the most important thing because the most important thing is actually a set of factors together, but definitely margin is one of the most important things. So let's go ahead and see it right now. So what I want you to understand is this. Check it out. We're going to go ahead and see the margin level of this account. So if you check out the margin level of this account is at 4,500%. Okay, so let me just type in. We're at 4,500%. Okay, this is the margin level. Now, how do you know if your margin level is safe or not? Well, this depends on a lot of factors, but for this class, I'm going to talk about the strategy in which we're not going to use a stop loss. For example, if you use stop loss, that's a whole different thing. But for a non-stop loss strategy, this actually is going to change. So although I don't think there's a clear answer because it depends, I'm just going to say that anything between 5,000%, okay, anything 5,000% and 1,000% is safe. So this range here between 5,000 to 1,000 could be considered quote unquote safe depending on how you're doing it. It could be 3,000%, 4,000%, 2,000%. And why this? Okay, basically the reason why 4,000% is safe is that if you get to below 1,000%, you run the risk of blowing up your account. So if you get to 100% of margin, for example, if you get to 100% of margin, you run the risk of actually being stopped out by the broker, which is the last thing you want to do, because if you get to that level, that means you're going to lose all of your money. In this case here, I have this 1,000 cent account in which we're just trading for the videos, in which I'm trying to do 10%. So the idea here is to do 100% of this money before I blow up 100% of the money, and then I just redo it over and over and over again. And then there are many ways in which I can do this. I could be depositing or allocating more money, which is one thing. Depositing could be hedging. That's how you protect your account. Okay, and understanding the margin. If you can control the margin like that, you're more safe. This is how you're going to use the margin. Now, say here we're trading GBP CAD. Okay, so as you can see here, we're trading GBP CAD. Okay, I currently have a buying position, so I have a trade that I want the market to go up. Okay, and the limit would be my however much money I want to risk it, okay, for this specific trade. But the margin level here is how far or how close it is to trade from the stop out. Say for example, this is 1,000% margin. So on the upper part, this would be where my profit would go, okay, or the range. And if I have the trade right here, this will be my stop out, okay. This red line right here would be my stop out. And this is at 1,000% margin. So if I increase the margin to 2,000%, this would be the double. So instead of being here, it would be right down here more or less. Okay, so now you have more range, in which if the market gets to down here, you're not going to be stopped out, and you have more range, like I said, more space to let the market move up and down so I can make the profits, which could be both good and bad. Because if you have a margin that's too high and it's too spaced out like that, you actually make a very low percentage rate, which is also bad because you're already trading at a very high risk. And if you don't make enough to cover for that, to make up for that risk that you're taking, then in my opinion, it's not even worth it. So you cannot just make it so spaced out to the point where you barely make any profits. So you have to be careful with this, okay? But that's more or less how would you do this? And if you're not using a stop loss, this can vary as well, because you can use the margin for other trades, because if you open 2-3 trades at the same time, you actually change the dynamics of the margin level to see how far you're going to take it. But this is more or less how this margin level works. It's actually more complicated than that, but I don't want to make this video too long. Okay, I want to make something simpler for you guys. But the idea here is to, continuing putting out classes, and then we studying in the market together so we can understand what we're doing a little bit more every single day. All right. And currently this account right here is doing 5% of profit. If you see all the trades that I closed here, they are making up 51.80, okay? Which for this specific account represent 5% of profit in 1 month, Okay. It doesn't matter the amount of money that you make, whether it's 51 or 100 or 10,000 or 5,000. What I'm trying to teach you guys is the percentage rate off the specific account. So you could do this with $100 or 10,000 or 5,000 or 1,000 or 50 or however much money you want to make, so that you understand and you can disclose the risk of what you're doing. So that's more or less how I come across margin level. And just like I said, this is just one of the key things that you got to understand to make yourself somewhat more protected in the market, because what you got to always keep looking for is if your margin level is decreasing. So every time your margin level is decreasing, you have to be more aware of what you're doing. What are you going to do? Are you going to hedge it? Are you going to close the trade? Are you going to get stopped out? Are you going to blow up an account that's actually positive, because you can blow up a positive account as well? Are you going to deposit more money? Are you going to wait? Do you have other things? Do you have other market, any other market hedging this account? Like maybe you're using different markets. Do you have crypto to cover it? Do you have stocks to cover it up? What's the percentage rate of your money that you're allocating here to be protected just in case something bad happens, for example? So there's so many questions, right? That's why I want y'all to study it, because it's actually a little bit more dynamic than this. And then hopefully we can start doing the trades as the time goes by. So I hope you liked the video. I don't know if that was too complicated. Let me know. But yeah, that's kind of it. Thank you so much for watching the video. Subscribe for more. Hopefully you understood something of it. If not, just go check the next videos. We're going to be studying every week. And that's it. Thank you. Bye.